Mr. Rajkiran Rai is also joining us now from Union Bank, MD and CEO. Thanks so much for joining us, Mr. Rai. You know, we wanted to get a sense, first of all, where you see credit costs for banks in Q2 and whether or not you feel it'll be much lower. Overall, do you see things getting better?
Yeah, the credit cost for the full year, it will be a cumulative number actually, because last 2-3 quarters we are not recognized the NPAs, even though we declared perform NPA and most of the expected provision is on the standard book as of now. So the credit cost for the bank full year can be anything between 2 to 3% for the system.
Okay. How much do you feel the second wave is going to have an impact when it comes to MSMEs, some other industries with lockdowns imposed on certain states?
Now the lockdowns are very localized only in certain pockets. So we need to see how it plays out, because it's the initial phase of the second wave. So now we are having much better management capabilities for handling COVID. With vaccine availability and better treatment lines, hopefully it can be controlled better. So as long as it is localized in few pockets, we don't see much damage. So, but we need to see how the things will evolve. So if it continues for a longer period, yes, there can be impact. But then if it is only for a month, I think we'll come back quickly.
Okay. Okay, so sounding still, cautiously optimistic there. Now, last year, banks across the board had raised capital quite furiously. Do you think that such capital and provisioning requirements will return as of now? Do you see that kind of momentum this year as well?
I don't foresee much aggressive capital raising, because many of the private sector banks have raised aggressively capital and some of the public sector also had done. But then I think the capital portion of the banks are quite adequate. Actually, there was some movement to raise capital because the RBI projections on the stress was on a much higher side. So anticipating that, there was a capital raising going on. But then now we are much better in better control, and we know the numbers now. Things are not as bad as it is projected to be. So the delinquency is quite low compared to the expectations, and the credit cost also is quite low. So I don't foresee the capital requirement for provisioning. There will be capital requirements for growth as we go along. That will happen maybe around 22-23.
All right. Now, according to some reports, the Union Bank of India is looking to digitize the recovery process as well. What does that mean exactly, and how will this help to plug in leakages?
Actually, we are sitting on a gross NPA of almost 90,000 crores and a return off book of almost 30-40% of that. So it's a quite big number, and the number of accounts involved are also quite huge. So what we did is last year we created a SAMV vertical, what we call the stress and asset management vertical, with the exclusive branches handling only the stressed assets. Now, when we are doing it, actually, we realized that we need a strong digital platform to handle it, because there are litigations going on at the various DRTs, there are court cases going on, there are surface eye notices, lakhs of notices being issued. So we felt the necessity that we need to bring it in one common platform and link it together so that we have a better MIS and we monitor it more aggressively, because we need to recover, because we have made almost 86% provisions on all these accounts. So it's the time to write back, because there was a cycle where there was aggressive provisioning. Now the cycle has started where we need to see the provision write backs. That can happen only with aggressive recovery. So we are digitizing the whole process.
Sure. Mr. Rao also wanted to understand whether or not you would have to provision higher in the coming quarters. We've already begun to see localized lockdowns. On account of that, do you see any damage happening onto your book? And will you then have to provision higher due to the spike in COVID that one is seeing?
See, as far as the Q4 is concerned, actually, we continue to declare performa NPAs up to December, and there is a fair estimate of the numbers, and the required provisions are already done, actually. So in March, actually, we don't foresee any difficulty in providing for the balance and declaring the actual NPA declaration will not create much problem, because the performa NPAs were declared regular basis. So now when it comes to the new lockdown and the expected slippages and all that, things are only evolving. It is too premature to take a call on that. See, last time, even after 6 months of lockdown, moratorium and all that, the way the things have come back and the economy bounced back, we have a very, very strong economy which can bounce back quickly. So that 1 month, 2 month actually of restriction, that too very localized restriction, should not damage much. So, but then anyway, we need to watch out how this the second wave plays out. So, but then at this point of time, we don't see much damage.
Okay. Give me some color on your book as to how the retail segment as well as the corporate segment is shaping up, and whether there are any segments which are still under stress.
I will desist from giving exact numbers because our results will be there a few weeks down the line. But then, yes, we based on the December numbers also, the stress is very less in corporate. Actually, the corporate book has behaved very well, and we don't see much slippages and much restructuring on the corporate book. It is on all expected numbers. On MSME, yes, actually slightly higher level of stress, and some restructuring in that book will be seen. Retail, actually, there is a one-time pain actually which may have to be absorbed in March by way of some restructuring and some slippages, because these are the accounts which are directly affected by the COVID and all that. But they're not a very big number, which is well within our declared numbers. So once that is done, the remaining book will behave properly. We have no issues. They all come back to normalcy now. So we don't see much this thing. But the MSME, yes, the stress will continue more for some more time, but then there is adequate resolution mechanism being given for MSMEs. So hopefully that will be also balanced well as we go along.
Sure. Within the corporate book, Mr. Rao, could you just give me color on which sectors are actually leading and aiding the recovery?
Corporate, actually, see, there are certain sectors which you always talk about. There are specialists who come and speak. So from the banking perspective, when you look at IT, pharma, which are doing very well, they're not very big borrowers to the system. For us, actually, the steel, cement, construction, these are the industries which are doing very well at this time. There is a great push. These industries, they're doing very well, and we are seeing actually very good results. Even for us, even the textile that we done very well, and most of these businesses which are connected to us, they are seeing a good traction in export orders. So all these sectors are doing well. So except the hospitality sector and other connected areas where the COVID has a direct impact, all other sectors have bounced back and they're doing pretty well.